Hey everyone, it is Evan here from the Trade Risk on Friday, September 21st, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we got a lot to cover. We're going to jump right into the charts here with the S&P 500 weekly time frame. This is the cash settled market, and it is particularly important to look at the cash settled market this time around because the very popular SPY ETF did go ex-dividend here on Friday, $1.32. That's how much this chart is skewed to the downside. If you were to look at the performance right now, it shows up 0.4% here for the week. But if we were to look at the cash settled market, the correct representation of this week's progress, we actually finished higher, 0.87%. So be aware of that when you're looking at charts, when you're doing your homework this weekend. Probably best to use the cash settled market for the S&P 500 just to get that real sort of true view of some of the levels, particularly in the near term. So with that said, S&P 500 strong week, almost 1% advancement to the upside. And once again, we did set a new record all-time closing high here on the weekly time frame, daily time frame as well this week. And that was important because for the past couple of weeks, we did get this little bit of a stutter step, this little bit of a pullback and check back to this 2872 level. The past 2 weeks or so, we've been kind of grinding and finding some support around this 2872 level. We saw a little bit of volatility to start off the beginning of this week, but buyers again stepped up and ultimately launched us higher, clearing above all of the past recent highs here from the past 3 weeks, and again closing at 2930 for a new closing all-time high. So skies are once again clear for the bulls here. No major overhead supply to contend with, and support has recently just held around this 2872 level. That's going to be the elephant in the room. That's going to be the important area to see this market hold going forward, 2872. If we abruptly lost that, if we saw some sudden reversal and breakdown of 2872, then all bets are off in my mind, at least for the short and even I would say intermediate term. If we started to lose this level, that would be a pretty significant head fake for the market. As it stands, no signs of losing that level just yet. In fact, it's the opposite again with these new all-time closing highs. There are some divergences out there. You can look simply at the top pane of my chart here, this MACD, this momentum oscillator here. You can see it is at a much lower sort of slope or real value, and frankly, than it was back here at the late 2017 rally. So it says that the market is slowing in its sort of pep, its urgency as it continues to climb to new highs. That does not mean it has to stop immediately. It does not mean that these highs have to fail right here, right now, or even in the next couple of weeks. It's simply just a measure to pay attention to. It's something to be aware of. But for me personally, anyway, I prefer to see price as the ultimate sort of indicator for me. And that would say if we started to now break down of some short-term support, if we saw the trend start to break, if we saw some key levels lost to the downside, coupled with some divergence here on this big time frame, that again is why I would be concerned if we started to see that abrupt loss of 2872. But until and if that happens, this narrative can certainly continue. It is best to participate and not be stubbornly fighting this market. And I think when we start to turn, there will certainly be ample signals and evidence when this market does turn. But for now, again, market continues to grind higher. Weekly chart looks good. Let's look at the daily chart now. Let's switch over to this view here. So this is just zoomed in now on a day-to-day chart, daily time frame chart. And again, it's the same exact picture. You can see we did stumble a bit, like we mentioned at the top of the video, at the start of this week. This was Monday's session. And this here, was really a important level, or really Tuesday was the important session here, because Monday, as the market closed, we had renewed sort of tariff talks and the trade war and all of that rhetoric kind of coming back out in the news with all the fresh words worry and articles being posted, and the market said it didn't really care, at least in the short term, that what was said on Monday and what was happening out there really just didn't impact markets, because we did not get any follow through on Tuesday. In fact, we saw a complete reversal in the face of those worrisome headlines, and we saw the market continue to lift higher into the end of the week. So the daily chart here, again, 20, I would say, you know, if you're an active trader and you're looking at the shorter term levels, we got this open gap here that didn't really quite fill. This 29.15 area, that's where we topped out at the end of August. That is where we essentially broke out from on Thursday. That would be a near term level, just like we looked at the weekly chart and said this would be a head fake if we started to lose 28.72 here. Well, it's kind of the same thing on a micro scale. If we started to lose 29.15 or so, if we saw an abrupt loss of that next week, then that would open us up to a little more downside here into the next week, so or in for the days looking ahead. So that is a level to pay attention to. Would be for you shorter term traders is 29.15 area, and then ultimately 28.72, perhaps Monday's lows here around 28.90, all micro levels for you more active traders out there. But as it stands, again, trend remains higher here, above all key moving averages, above all trend lines, above all major support. So life looks good here for the bulls on multiple time frames. Does not mean that can't change, but for now, that is the evidence we have presented to us. So that is the S&P 500. Let's look at the Russell 2000, and this is where there are a little bit more of some mixed signals here, because we haven't yet gotten the IWM to participate on new highs. Again, I don't want to be overcritical or say that it has to be. It's done phenomenally in terms of performance this year. It recently broke out here in August. It moved up about a week or so of progress, and then it's kind of checked back and it's gone sideways here. So as I mentioned in the midweek video, this 169 area, 169.60 or so, that's an important level. That again is the breakout level. It's the top end of this range going back the past couple of months. That's a good level to key off of in the short term. Price is nice and tight here, kind of ripe for an expansion in range one way or the other. So that's going to be an important cue to pay attention to next week if this actually does thrust up and start to break out, turns into a continuation pattern, or if this breaks down and we have, again, some type of false breakout here, which would put some pressure on the market overall to the downside. So wait and see mode here for Russell 2000. It's kind of a high stakes area. Be interesting to see which way this resolves. And the NASDAQ 100, again, hasn't quite broken out to new highs here. It's doing a lot of kind of moving sideways right around this 183 to 184 area. It's just kind of chopping around here under its all-time highs made just a couple weeks ago at the end of August on 830. So Qs sideways, consolidating. The major uptrend is still higher here. If we started to lose 180 or so to the downside, essentially last week's lows, last 2 weeks' lows, that would be concerning here, certainly in the short term, and would put some pressure on this market. Otherwise, let's see which way this resolves. The Qs and the IWM, I think, are going to be of interest to see how those continuation patterns, how these consolidation patterns resolves themselves. And the Dow Jones, which we don't ever really analyze here, just for the sake of redundancy, the Dow Jones, importantly, was essentially the leader here over the past really, couple of weeks. And, if you watch the trade ideas video we put out on Wednesday, it was littered with industrial stocks, and that goes to make sense because we do see this area of the market really heating up. But the Dow Jones launched about 2% higher this week. It was best performer out there, and it did break out finally above its January highs. This was the only major average not to set new all-time highs up until this week. So it was good to see the Dow Jones starting to participate here on the upside. We'll see if that can sustain, if that can continue, but it was certainly a bright spot this week. So let us, I think that covers pretty Pretty in depth there on the major averages. Let's take a look at some of the other major markets now. We'll go to TLT next, which continues now for the 4th week in a row to the downside, testing some major levels here in TLT. It was down 1.22%, a little bit of life off of these lows, and this 116 area, 116.50 to 117 is going to be a very key level going back multiple years. This has been support. Dip buyers have stepped in here in TLT, and we need to see if they can do it again here for essentially the 3rd retest this year. It's going to be pretty important. It's at an inflection point. Whether you're bullish, bearish, I think it's an area to pay attention to. Excuse me. And this is going to be something that I think a lot of traders should have some eyes on this week, and this should, really start to influence or certainly has the potential to influence the equity markets as a whole, certainly the yield curve as a whole product, not just the long side of it as the TLT represents, but again, something to pay attention to there. 4 weeks down in a row at a major level. Let's see if some dip buyers can step in here as it has had a kind of an extended move. But if we take out these lows next week, I would really be looking out below for continuation to the downside. If though we do see further stabilization above this 116.44 area, this week's lows, then maybe the bulls can come to the rescue once again. So that is the TLT, something to pay attention to for next week. USO having a impressive week to the upside, 3.17%, getting back to the year-to-date highs in oil here, getting through some of the chops, some of this 1470 area that it has stumbled over recent weeks or so. Nice progress there. It still is below the highs made in July, so we'll still need to see if the bulls can really clear the water here to new all-time highs, but certainly in the short term, the trend is higher here for USO. Natural gas is a little more interesting to me in terms of an actionable move here, up almost or over 8% this week, and doing it on some heavy volume, taking out the year-to-date highs, making a new weekly closing high for natural gas. UNG looks pretty ripe here for continued movement to the upside. It is, just flirting with this new closing high here. So we want to see if this, make sure this doesn't turn into some false signal here. Make sure we don't quickly reject this next week, but it certainly is in the bulls' favor to continue to hold on to this progress and advance it next week. But an important kind of breakout week here structurally, especially from the weekly time frame. And if you really look at the spot futures market here, I think this chart would be even cleaner, a little more bullish than the decaying UNG ETF. So nice life there out of the bulls this week in natural gas. Finally, if we move on to metals here, GLD up about 0.5% here on the week, really not doing anything, still moving sideways, really don't have too much else to add to it. Silver, same exact thing, still kind of hanging out here on the lows. Really just interested to see which way these consolidations resolve themselves. For now, the bleeding has stopped in these bearish trends that they've been in, but we'll need, still yet to be seen whether or not these trends are ready to reverse. Gold and silver, let's see how they act into next week. So those, I think, cover all the major averages. Let's get into some of the sectors now. If we sort by the weekly performance, we'll take a look at the top performing sectors this week, and number one is materials, XLB. Honestly, though, when I look and I kind of zoom out here in this chart, it's very impressive. Nice move this week, and especially in some of these individual names. But when we look here at the structure, we are kind of running right into some resistance. This is where XLB has peaked multiple times this year, going all the way back to really February and March, up around this 62, 61 and change area. And you can see once again in June, here we are again, kind of got this little downward sloping trend line, but really got some horizontal, some stiff resistance up here. So we got a little bit of a reaction off of it on Friday as we closed down 74 basis points. I essentially would not really be comfortable chasing this, but certainly there are individual names that are hot here that are setting up a little bit better than the structure of XLB as a whole. But nice performance. Got to be careful chasing that into resistance. XLF to me sets up a little bit better here, a little more of an attractive sort of risk to reward here, as this this really kind of clears above, really, you know, I mean, it's a bit messy in terms of this band here. It's still a messy chart. The weekly chart will really kind of smooth this out a bit more. What you see here is essentially topping out in April, May, June. This was resistance kind of rolled over here from this 28 and 28.50, 28.30, however you want to call it, rolled over, tried to make new lows, failed to make those new lows or sustain those new lows, popped back up to about this 28.30 area, went sideways here, and then it's trying to escape it here this week with this almost 2% rally on slightly higher volume. If we go back down to that daily chart, it certainly gave a little bit back here on Friday, but overall, Thursday's session here and Friday's, actually Wednesday and Thursday's session. Take a look at the volume that came in. This nice expansion higher here as we broke above this channel. That was impressive to see on Wednesday. And some of these components individually, or even some of the larger banks, setting up a lot nicer and cleaner than the XLF pattern here is letting on. But financials, I do think, unlike XLB, which is kind of running into resistance here a little bit on the daily chart, I think the XLF is poised to be a slightly better rotation candidate, but I think each can work depending on your time frame, depending on how you're looking at it. But XLF, again, regardless, nice performance this week, nice resolve here. I think as long as it can hold above $28, $28.25 or so, then XLF looks good. Finally, XLE. So if we look at XLE here as the third performer, up a little over 1% this week. We look here at the recovery of this 73.75 area. These were the lows from May, June, right in here. And we lost it briefly, broke back up. We lost it again. So we had this little double bottom right in here around 71.90, just under 72 bucks. We reclaimed this level, and now we're kind of just back into the sideways range. So I don't want to go too in depth over analyzing just a sideways market here. I think the weekly chart smooths out some of this mess in here, but we had this nice rip in April. We've retraced some of it. We're consolidating through time. We're back above 73 and change or so. So give it some time. I don't think it is pressed to do anything one way or the other right now. Just really could move sideways, go back and forth in this sideways range, and ultimately set us up for a move maybe later in the year. On the downside this week, we saw XLU. So if we look at the performance here on utilities, it was down almost 2.5% on heavy volume, broke below the past 5 weeks of lows. That is not an encouraging development there. It's not the end of the world either. XLU did enjoy a nice rally throughout June, July, and August. It's giving some of that back now in the near term. Just really not that interesting. Tried to stabilize here, Thursday and Friday, so maybe you get a little more mean reversion here or a little bit of a recovery bounce. We'll have to see and measure that next week if you're interested in playing in the XLU. XLK, second worst performer this week, down a little less than 0.5% here. Looks similar to the Qs, really just kind of in a messy area. Hasn't made new highs yet. Yet to be seen whether or not this maybe turns into a lower high if this rolls over here, or if this is just kind of a pause before it breaks out and then ends up retesting these highs. For now, the longer term trends still remain higher here. It's above key major support, so give it the benefit of the doubt for now, but just a little bit messy, I think, is the best way to sum that up in the short term. And then finally, consumer discretionary ETF. It was flat on the week, so made it essentially in the bottom bucket here. This trend line has been in place since April, so this is still a key level to see if this stock can hold above. For now, though, it is still holding above it. Amazon makes a big weighting here. Fact that it lost this 117.50 area, that's a short-term kind of sell signal there if you're really active for your short-term traders, but overall kind of consolidating at its highs here, still holding above this major trend line. If we were to see some type of continued selling, some expansion in range below this 115.50 level, that would be a pretty good sell signal and a cause for some concern. Otherwise, we'll see if this can be contained and if this kind of wall of worry just continues to get climbed here in the XLY. So that is it. That covers everything: sectors, major markets, and the stock market as a whole. Hopefully you guys had a good week trading. Thank you so much, as always, for tuning in to watch these videos. You can subscribe on YouTube if you want to stay up to date date with all of the latest that we are publishing. So get out there, enjoy the weekend. Thanks so much for watching, and I will talk to you again next week.